Okay, next up, we're going to hear from Celsius Resources and their Managing Director, Brendan Borg. Brendan.
Thank you. I'm here today to talk about our Cobalt project in Namibia, the Opuwo Cobalt project. I'll just start by talking a little bit about the background of the company, the corporate background. We've got a bit over 600 million shares on issue at the moment. We've had a good run up this year. We picked up the project about 15 months ago, and it was a recapitalised shell at that time, company at 1 cent. And as we've progressed through the exploration of this project, we've had a good run up to currently trading around 23 cents. We have some good shareholders there at the top there, Gecko Namibia. They were actually the vendor of the project originally, and they, as a result of a series of transactions, they became our largest shareholder. They also provide us in country with our drilling services and also geological and exploration management services. In terms of what we like about the project, I guess in a word, it's a very, very large project. Long life, reliable supply of cobalt we have the potential to provide here. We've had that large scale stamped last week on Monday. We put out our Maiden JORC compliant resource, 112.4 million tonnes. The contained cobalt there is about 126,100 tonnes. So that ranks us outside of the DRC, where most of the cobalt production comes from. We rank as the largest sulphide non-DRC type project. And the type of project being sulphide is important because it feeds into lower capex and opex requirements. It's very large in terms of the scale. The resource we have covers about 10 kilometres of the strike of about 15 that we've identified this mineralisation in so far. We've also got up over 100 kilometres of strike length of similar rocks within the tenements that we're yet to explore at all. Favourable mineralogy. That was one of the things that really attracted us to the project in the beginning. It's a simple cobalt sulphide mineral called lignite, which is CO3S4. It's very different to most other cobalt-bearing minerals around the world. Usually they have, or quite often they have arsenic in the structure or iron in the structure of the mineral, which again, that feeds into relatively easy processing for us. We have done a lot of work on the processing already. We did this at an early stage. We've demonstrated we can get high recoveries into a simple sulphide concentrate. We've also then demonstrated that we can take our own concentrate and we can get good leach extractions into sulfuric acid medium. The ultimate aim for us at the project is to produce cobalt sulphate heptahydrate, which feeds into the battery industry, and also with a byproduct of copper metal. Now that we've got the resource out of the way, the next thing is for us to deliver on our scoping study. We're aiming to do that by the middle of the year. So just going into a little bit more detail, cobalt market, obviously that's helped us enormously. One thing about this project is we're primarily a cobalt project, and that makes us quite different to any other project really, apart from those in Morocco maybe. The other types of projects are reliant on nickel or copper prices in order to be able to generate those cobalt credits, but we're about 75% of the value is actually in our cobalt. That price there, $25,000 a tonne when we picked up the project some 15 months ago, now it has surged to over $90,000 a tonne, and obviously that helps us enormously. In terms of why we wanted to get into cobalt in the first place, as I said, when we picked this up, the price was quite low. Not many people wanted to know about cobalt at that particular time. But if you look at the demand that's coming for the various commodities based on EV adoption, lithium and cobalt are clearly the top picks. But for me, as a company that was looking to develop a resource, the chart on the right really explains why we're so interested in doing that. Basically says that if every vehicle was an EV, there'd be less than 3 years reserves of cobalt available. And given that the overlay there that 65% of those reserves are in the DRC, that adds another element of interest for us. In terms of Namibia, we had what we were basically looking for here was a cobalt project that was similar to the types that you see in the DRC and Zambia, but not in the DRC. So we ended up with this project in Namibia. I'd previously spent time working in Namibia before, so I was very comfortable with the jurisdiction. We have, despite being quite remote, 100 kilometres from the Angolan border, we actually have very good infrastructure there. Probably the most interesting part around the infrastructure is that hydroelectric grid power. So we'll be looking at about 5 cents US per kilowatt hour for our power costs, which makes a big difference in terms of our operating costs. Just a few pictures there of what the infrastructure looks like. That type of road there that you see in the middle, that's typical of the roads from the capital all the way up to within 5 kilometres of the project boundary. It's a 700 kilometre trip from the capital, but it takes only about 6 hours to drive there, so that gives you a bit of an idea. The ownership structure, we started out earning 76% of this project, but through a series of transactions, we're now at 95% of the project. There's a 5% loan carried portion that stays with a local, previously disadvantaged Namibian group. Our largest shareholder is also a Namibian mining company, mining and diversified mining and mining services company, Gecko Namibia. They own approximately 8.5% of the company. And as I touched on, they provide our in-country services for drilling and geological management and things like that. I've already touched on the size of the project and the style of mineralisation, but it's worth reiterating that this is a largely unexplored area. So despite us already having identified one of the largest non-DRC sulphide project in the world, we've still got a vast amount of ground on the project still to explore, and we'll look to do that in the next couple of months while we're finalising our scoping study on the known mineral resource. We'll be looking to see what other potential there is around the tenements. There are other prospects that include high-grade vanadium prospects on the tenements as well. So just touching a little bit on the resource, so 112.4 million tonnes. Worth noting there is that 72 million tonnes of that is in the indicated category, the higher confidence indicated category. That speaks to the relatively simple and consistent nature of this mineralisation over the 10 kilometres. The ore type that we have, we've broken down the resource, and 95% plus of the resource is the sulphide, fresh sulphide type ore, which means that there's less risk around the project in terms of the oxide and transition ores not performing as we would like in the flotation circuits. As I touched on, open in all directions as well. So while we've got a resource over around about 10 kilometres of this strike length, it's certainly open at depth and open laterally in both directions. So there's plenty of scope for us to define more near-surface resources, we think, here. Just a little breakdown there. So table 1 there breaks down the ore deposit by indicated and inferred, and also splits it down into the different ore types. So yeah, as I said, more than 95% is the fresh sulphide ore type that we've demonstrated performs well in our flotation circuits. And the second table there just shows the effect of adjusting that cut-off grade there. So we've used a cut-off of 600 ppm cobalt, but as you can see, if we drop that back to 400 in the case of extremely high cobalt prices, which we fully expect will eventuate, then we can add quite a lot of tonnes. And similarly, going the other direction, we've still got a very large deposit if we raise that cut-off grade and therefore raise the grade of the deposit. And that's just shown diagrammatically what it looks like, the grade tonnage curve. And these images just show a little bit more detail on the block model for the resource. On the top right there, you can see the indicated and inferred, the indicated being the red and the deeper material there being the blue, being inferred, sorry. And the block model pictures down the bottom there just show that we do have still have a coherent mineable, what we think will be mineable ore bodies even when we use a 1000 ppm cutoff. So it gives us the ability to be able to focus on the higher grade portions of the deposit in the initial mining. In terms of what it looks like in a cross-section, we've got there 95% of this deposit looks like the picture on the left there. It's very, very simple. I liken it to a coal seam. We do get a little bit of complexity as shown on the right there, where we do have some of this mineralised material that is potentially more interesting from an open pit perspective. We did a lot of this metallurgical work very early on in the piece after we drilled the first 20 holes. We thought that the mineralogy would lend itself to good metallurgy, and we've been able to prove that by getting high recoveries of cobalt, so up to 88% using flotation. And then as we've progressed along, we've taken our own concentrate, done a series of leach tests on that, and we've been able to demonstrate that at relatively low pressures and temperatures we can get very good leach extractions of the metals of interest, namely cobalt, copper and zinc as well. We think that this process that we have will be very, very low in terms of its sulfuric acid requirement. That's because the process itself actually generates sulfuric acid. So we expect that to give us some really good advantages around OPEX. As I touched on, the next big milestone for the company will be the delivering of this scoping study at the end of June. That'll start to wrap some numbers around what we've got here. We've got a very big resource, and now we just need to prove what the economics of that will be, which we're looking forward to doing. And just lastly here, I've just got a peer comparison type table here that just shows where we sit in relation to other ASX listed projects. The orange balls being the sulphide type projects, whereas the green are the nickel, predominantly the nickel laterite types of projects that typically have much, much higher CapEx requirements than what we'll be talking about for this project. Just to reiterate, the key things moving forward, the scoping study end of June, also a bit more mineral exploration coming, which we expect will be able to provide some more evidence of the upside still to be uncovered on the project. Thank you very much.